Hello, and thank you for joining us for this webinar on the climate crisis and the role of renewable energy in the energy crisis. My name is Melanie Brooks, and I'm a portfolio manager at Fondsfinans Kapitalforvaltning, or Fondsfinans Asset Management, here in Oslo, Norway. I manage our global renewable energy fund, and I'm also head of ESG at Fondsfinans. Before we get started, I'll ask you to have a quick look at our disclaimer. Okay, let's get started. As you can imagine from the title of the presentation, which included the word crisis not once but twice, we do have some bad news to discuss. We are in the midst of a climate crisis and an energy crisis. We also have good news though, and there is reason for optimism. Renewable energy can help alleviate both of these crises. It will not solve everything, but it can help, and it makes economic sense increasingly. I'm also going to talk a little bit about our equity fund, Fondsfinans Fornybar Energi, or Fondsfinans Renewable Energy, which is invested across the renewable energy value chain and has exposure to many of the technologies and solutions we'll be talking about today. So let's get started. Bad news item number one, the climate crisis. So this is just to say that, climate change is happening. It's not something that's coming. It's something that's already here. According to scientists, the average global temperature has already increased by 1.1 degrees Celsius or 1.9 degrees Fahrenheit since 1880. And as we can see here, this is a graph that was produced by the US Environmental Protection Agency. This is separating the different types of drivers for global temperature. And we can see the impact that human versus natural drivers are having on global temperature. And so I think if there's any doubt, if there's still some remaining climate skeptics that think that, this is just natural variation, what the data tells us is that it's clear that this long-term warming trend we're now seeing can only be explained by the effects of human activity on the climate. This is a truly global crisis with both societal and economic impacts, in addition to those that we see on nature. Pakistan has been experiencing unprecedented flooding, and there's more than 30 million people that have been displaced by rainfall and flooding lately in the last month. On the top right, we're also looking at a picture that we see increasingly often, and this is of wildfires threatening homes in the American West. We know that the cost of natural disasters has increased considerably in the past decades. And this is both a result of the fact that climate change increases the risks of extreme weather, and also the fact that we have built our societies and value chains closer to nature, leaving us more exposed and at a greater risk for things like catastrophic wildfire and flooding. So we know now that the climate is changing. We know that emissions from human activities are the main cause of this. And this is very bad news, but it has a silver lining, and that's that we know then how to stop it. We know what we can do about it. And there is now broad international support for reducing emissions. According to the IPCC, the Intergovernmental Panel on Climate Change, we need to achieve net zero emissions by about mid-century in order to limit global warming to 1.5 degrees C and avoid the worst consequences of climate change. As of June this year, we see that 136 countries covering 80% of global population and 83% of global emissions have now set net zero targets. Granted, not all of this is by 2050. China's net zero target is set for 2060, India's by 2070. But this still shows that we've made a tremendous amount of progress in terms of getting global consensus about the need to reduce emissions. 2050 seems like a very long ways away, and it can be tempting to delay action. We think that we might be able to really make a lot of progress towards making emissions cuts as we get closer in the next 2 decades. But I find it more useful to think about the changes we need to make in the near term, say by 2030, that can help make sure that we get to net zero by 2050. Globally, we need to reduce emissions by about 45% by 2030. Europe is aiming for 55% emissions reductions with the European Green Deal, which we'll talk a little bit more about later. According to the IEA, a lot of the emissions reductions that we need to do by 2030 can be achieved through technologies that we know, that we're quite familiar with, and that are pretty mature. We need increased energy production from wind and solar, as you can see here. We also need to really electrify the vehicle fleet. We need to see a huge increase in the amount of electric vehicles. And we also really need to increase the rate of energy efficiency gains. So this is about doing more with less. We need to really use less energy for all of our processes, from buildings to industrial processes to transportation and the like. And we've made progress on a lot of these things already. As you can see here, we have already massively increased the amount of wind and solar in terms of the share of global electricity generation. And we have also managed to really reduce the carbon intensity of major economies' GDP per capita. So we've made progress. We know how to do it, but we just need to do more and we need to do faster. So now we have bad news item number 2. We've got the energy crisis. Let's put this into perspective. Let's put these current energy prices that we're seeing into perspective. A crisis, this is something like we haven't seen in this century. As you can see here, looking at the different energy commodity prices, monthly averages since around January 2000, this is a spike that is really unprecedented in many of our lives, really. And it's also increasingly clear that we're going to see government intervention into the energy markets to curb the impact of these high energy prices on both European households and the European economy. Things are changing very quickly, and as of recording right now, we're not exactly sure what the final energy market interventions will look like, but we're likely to see a combination of windfall taxes on non-gas production, also new taxes potentially on fossil fuel companies, some mandatory consumption cuts during peak hours, and consumer relief. So the Russian invasion of Ukraine earlier this year and the actions of both the EU and Russia when it comes to limiting EU imports of Russian gas, these are really front of mind right now at this stage in the energy crisis. But it's also really useful to look back and understand the broader context of the energy market in the last year plus, and the myriad of reasons that kind of explain how we got here today, leading up to the Russian invasion. So one of the factors that we saw already last year was that EU gas storage stocks were well below average levels. Another factor that has contributed to high energy prices, albeit to a small degree, has been the surge in EU carbon prices over the last 2 years. We can also see that weekly water storage levels, this is showing France, Italy, and Spain, we also know that this is true in Norway, have been very low compared to averages from the past 6 to 8 years. So that means that we have reduced hydropower output. We also know that there has been lower wind speed anomalies in the last year plus, and the lower wind speeds, particularly in 2021, led to a reduction in the potential for wind power generation in certain countries. So we've had less wind, we've had less hydro, we've also had lower than normal gas stocks leading into this crisis, and higher carbon prices. In addition, we've had a couple things going on with some major coal exporting countries. As an example, Indonesia has banned the export of coal twice in the last year over concerns for domestic supply. And we've also seen some other issues with coal exports from countries like Australia and India. And some of this had to do with monsoons. Some also had to do with COVID-related issues. But that means then that there's also been less coal in the global energy markets for a period. We've also seen China massively increasing its LNG imports in the last few years. And in 2021, at the end of 2021, it surpassed Japan in terms of LNG imports. Other things have been happening as well. We've seen, nuclear decommissioning, so less nuclear power in the mix. We've also seen more maintenance need to happen, so power plants being shut down for maintenance that wasn't able to happen during COVID, and a number of other factors that have helped lead us to where we are today. So I think that's important to keep in mind. It's not to undershadow or underemphasize the importance of the Russian war on where we are now with the energy crisis. But I think it's important to realize that this is really a global energy crisis, and with many things that we need to keep in mind to try to help avert this in the future. There are many that are now concerned that the rush to secure energy supplies in the short term is going to result in higher greenhouse gas emissions and a potential return to fossil fuels like coal, at least in the short term. Reduced nuclear output because of nuclear decommissioning and also maintenance, combined with low hydro output, has also led to increases in the use of coal, lignite, and gas. We've also seen increases in solar and wind, but not enough to offset the increases from fossil fuels. Energy security is, we need to remember this. This is not a nice to have. It is an absolute must for the well being of the European economy and people. But averting catastrophic climate change is just as serious in the longer term. So we really need to balance the needs of today with those of tomorrow. And this is a terribly difficult job for policymakers. But as I've heard it said by some analysts recently, we might be taking one small step back in terms of increasing the amount of fossil fuels in the short term, but there will be many quick steps forward in terms of renewables deployment in the coming years. And we're going to talk a little bit more about that in the next slides. So at the outset of the Russian war in Ukraine, the European Commission published plans to cut EU dependency on Russian gas by 2/3 already this year and end its reliance on Russian fossil fuels well before 2030. And this plan was called REPowerEU. There's basically three parts to this plan in order to phase out dependency on Russian fossil fuels. The first one is diversifying energy sources, and this can include, getting LNG from other countries. We need to also accelerate the clean energy transition. That's really pushing forward on investments in renewables, making permitting processes more easy, trying to make sure that we can offset some of the gas that we were previously using with new renewables. And we also need to save energy. So again, back to this theme of energy efficiency. We know that the cheapest, the greenest, and the most secure unit of energy we have is the one that we don't use. So in both the short term with regards to the energy crisis and the longer term with regards to the climate, we really need to focus on energy efficiency. And we also have a quote here, or a tweet actually, from European Commission President Ursula von der Leyen about how new renewable energy capacity is directly offsetting the use of natural gas. So this is a very important element of the European plan. So REPowerEU, this three-pronged plan that we just spoke about, this is really an acceleration of EU's Fit for 55 in terms of reducing energy intensity and also increasing the amount of renewables. This is just a little bit of a reminder about that EU Fit for 55 plan. This is to the aim of being 55% lower emissions in 2030 compared to 1990 and climate neutrality by 2050. So as part of Fit for 55, the EU was aiming to have 40% renewables in the energy mix by 2030. With REPowerEU, we're increasing that to 45% by 2030, but it's also really focusing on front-loading those investments to make sure that we get more online sooner to help reduce the reliance on gas in the near term. And a lot of people have been working very hard to look at the potential displacement of EU gas usage by the different REPowerEU measures. And we see that already in 2022, we can do quite a lot if these measures are fully implemented. So LNG is a very important element of the REPowerEU plan. We can't get completely off of gas for a number of different reasons, but we do need to get off of Russian gas. So LNG is a very important contributor to this. But in addition to this, we also see things like energy efficiency. Here it comes again. Rooftop solar, additional wind and solar capacity coming online earlier, the use of heat pumps, and some hydrogen, although this will be more in the longer term, but also biomethane already in 2022. Out to 2030, here we're looking at the potential displacement of gas by measures in REPowerEU that go beyond what's already been agreed in Fit for 55. So again, LNG is very important, but we see some major contributions from both, again, energy efficiency at the top, but also hydrogen and biomethane is going to have a much bigger role in 2030, according to the REPowerEU plan, versus what we saw in Fit for 55. In order to reach these renewable energy targets by 2030, we really need to mobilize a lot of investment. So we need to massively increase the amount of solar and wind capacity that's online, and that's going to take around $450 billion or euros, of investment by 2030, according to Rystad Energy, and over 800 billion euros of investment in wind capacity in that time frame. So this isn't going to happen by itself. We really need to mobilize capital to make this happen. Even with significant increases in renewables in the energy mix, Moving away from gas completely is going to be difficult. And I know that's a hard one for a lot of people to accept. But gas power is still the main source of flexibility backing up the intermittency of renewables. And gas is particularly key to backing up, as you can see here, whenever we have low wind output. In the longer term, we will have more possibilities to store energy and have backup power from batteries. But right now, those are still very expensive. So there's cost elements, but also supply chain related challenges to do that at scale. We also hope that green hydrogen is going to be a real option for both energy storage and backup power to build into the system. But we're unfortunately not there today. Nuclear energy is also another source of baseload power, but that has also shown itself to be politically problematic. So it's going to be really difficult for us to get away from both gas and nuclear. So that poses challenges and some inconvenient truths as well in the short term. So now, some good news from across the Atlantic. Finally, some good climate action from the US. Earlier this summer, the Inflation Reduction Act was passed in the United States. And as you can see from another tweet here, this is one of the most important investments that the US has made into energy security. Again, we're hearing about energy security and also developing clean energy solutions for the future. This is a huge package, and it took very many of us by surprise because we thought, the Build Back Better Act that had been discussed much of last year and earlier this year wasn't going to see the light of day. So when this passed this summer, it really took markets by surprise. And I, for one, as an American and Norwegian, am extremely happy about the direction that the US is now going in with this. So this is a bill which allocates $740 billion in total to different things. About half of this is going to be going to climate and environment spending. Some of this is in the form of direct tax credits, a lot of clean energy tax credits. We also see a lot about clean manufacturing in here, individual clean energy incentives, and building efficiency. Again, back to this with efficiency, and a number of other energy and climate related spending. So this is a major package which is going to really bring the US back, both in terms of being a credible partner in climate discussions, but also making sure that the US is going to be active in terms of being an industrial power in terms of clean energy and clean tech solutions moving forward. Okay, so now we've heard quite a bit about the incentives for renewable energy, not only in Europe with REPowerEU and Fit for 55, but also in the US with the IRA. But I've got some more good news, and it's that even without incentives, investing in renewables really makes sense from an economic perspective. Now we can see that renewables have become the cheapest source of new bulk power in countries comprising 2/3 of the world's population and 9/10 of electricity generation. And that is really, really big, right? So that's telling us that in the vast majority of the world, it's cheaper to build out new renewable energy power than new fossil fuel power stations. Here, we're looking at the levelized cost of electricity, and that means the LCOE, as we call it. And this is an economic assessment of the average total cost to build and operate a power generating asset over its lifetime, divided by the total energy output of the asset over that lifetime. So the LCOE is something that we use to compare the cost of new energy production. And since about 2019, onshore wind and utility scale solar has actually become cheaper than any other energy source. And here I just want to say, if you don't believe me, let's ask Texas. Last year, 2021, Texas installed the most solar panels of any US state. And I think that surprises a lot of people. We're used to hearing about California as kind of the vanguard of renewable energy investment and deployment. But Texas has really overtaken in some cases. This isn't looking at per capita, but this is just looking at the most solar panels installed. And a lot of people know a lot of things about Texas, but thinking about it as, a really environmentally proactive or climate proactive state maybe isn't one of them. And I actually have a quote here from John Berger, who is the CEO of Sonova Energy based out of Houston, Texas. This is a company that does rooftop solar. And this is a quote that he had at a conference recently that one of my colleagues attended. And he said, if you think our clients are buying our power because it's environmentally friendly, you're wrong. They buy it because it's cheaper. And this actually really encourages me, I have to say, because I think that it will be a bit wishful thinking if we depend on everyone becoming, a personal climate activist in order to transition over to clean energy. I think whenever it makes economic sense and provides energy security to people, even at the individual consumer level, then we really have a case for massive and rapid deployment of clean energy solutions. And Texas comes up on top again as well in terms of the share of net electricity generation coming from wind. So Texas is the number one wind generating state in the US, followed by states like Iowa, Oklahoma, and Kansas. These are also more conservative states that don't have very progressive environmental legislation or very generous incentives to do this. So when this is happening, it's because it makes economic sense at the individual state level. And granted, they also have a lot of wind in these states, and Texas has a lot of sun too. So, you've got kind of like the perfect mix of circumstances that help make this a good bet. But again, this is really helping in terms of deploying these renewable assets. A little bit more about rooftop solar. We're seeing that this is becoming increasingly attractive in Europe as well, with very short payback times for customers in some cases. So this is some numbers that we've gotten from Sparebank and Markets here in Oslo. And this is based on a spot price a couple weeks back, which is higher than the current spot price. But given different electricity price scenarios, you can look at the potential payback times for customers in different markets. And you can see that it's down to just a few years, 2, 3, 4 years in some cases. And that's a very attractive investment then to be made. And there's increasing incentives from different governments as well. And I think that I've seen numbers now saying from BNEF forecasting a 42.5% increase in installed residential solar capacity just in the last year alone. And we think this is a trend that's going to really continue. So we've had quite a bit of good news now, and I'm afraid I have to end this section with a little bit of not necessarily bad news, but some food for thought. I think this is a really important consideration. As you can see here, we're looking at the increased demand for specific metals in the energy transition. Here on top, we're looking at the amount of kilograms per vehicle of an electric car versus a conventional car of different metals like copper, cobalt, graphite, lithium, nickel. The amount needed in an EV is much, much higher than a conventional car. The same is true for looking at the amount of these metals needed in power generating infrastructure like offshore wind, onshore wind, and solar PV compared with traditional gas and coal-fired power plants. So we need a lot of these metals. And I think sometimes it's a little bit convenient to forget this whenever we're thinking about the green energy transition. It takes a lot of material. It also takes a lot of energy to build out a lot of this infrastructure. And I think it's important for us to remember, and be mindful of the fact that we need a lot of these raw materials, and we really can't switch out a reliance on Russia for natural gas, for example, to an over-reliance on other countries, such as China for battery metals. So this is going to bring up a lot of other questions. Some of them are opportunities, such as the opportunity for increased recycling. We need to get much, much better about this. And there are going to be a lot of incentives in place and regulation for the amount of recycled material in, say, batteries in the EU moving forward. But we also can't ignore, these issues of geopolitical and ESG challenges for other things. One example of that, and this is a very well-known example, is the human rights-related issues associated with cobalt production in DR Congo. So I think that this is something that we're going to have to work a lot more on. Recycling is part of it, but it's not probably going to be the full answer. And I know there are a lot of discussions now in different countries, including the US, about kind of the re-onshoring of some of these critical mineral supply chains. And we might need to kind of revisit our reluctance to do mining of these sorts of things in our home markets. Again, this is a difficult one, but we don't want to switch out, a lack of energy security with a lack of mineral security. So something to think on and work with. All right. So to wrap this up here, let's have a quick look at Fondsfinans Fornybar Energi, our renewable energy fund. And I think that this is going to hopefully end this on a good note, because we invest in a lot of the technologies that are really well positioned in terms of this big global megatrend with regards to renewable energy and clean energy technology. All right, so what does our fund invest in exactly? So we invest across the entire value chain for renewable energy. This is both in terms of production of renewable energy from sources such as wind and solar, but also in terms of transmission and storage and things that we categorize as other. But generally, we like to say that we're involved in anything that is going to facilitate the increased production and consumption of renewable energy. So in terms of wind, we can invest in wind energy developers. This is often utilities companies, but also more niche or specialized producers. We can invest in turbine producers or installing companies. For solar, again, with developers, module producers, inverters and trackers. We can invest in balance of system providers for utility scale solar, and also rooftop solar installation and financing. In terms of transmission and storage, some of the things that we can invest in include batteries, cable producers, electricity grids and smart grid technology, EV charging, hydrogen, and a range of software that contributes to this. For our other category, we've included biofuels, recycling, which is both mechanical recycling but also chemical recycling, energy efficiency, CCS, and other emerging technologies. Generally, we like to invest in large global companies with mature technologies and good liquidity, but we can also consider small positions in some of these more early stage technologies as long as they're listed and meet our other screening requirements. In terms of our portfolio, you can see that we are globally diversified in terms of the companies that we have across the entire renewable energy value chain. We've got about 44% of our fund invested in the US and about 44% across Europe. We have a slight home market bias, as you can see that we've got a little bit more Norway, Sweden, Denmark, and Finland than you might see in other funds. This is partially because we see a lot of opportunities coming out of the Nordics. They've been very much at the forefront of the clean energy transition with a very supportive regulatory regime and really strong governance and broader ESG. We've also got about 5% of the fund invested in China through Hong Kong listings. And just some examples of companies that we have in the portfolio. We've talked quite a lot about solar, both utility scale and rooftop solar, and some of the companies that we've invested in include Sunrun, Sonova, and Otovo, which is a Norwegian company. The other two are American, all involved in rooftop solar. First Solar is a US-based solar module producer, which is extremely well positioned given the new legislation in the US. Shoals is a company that offers balance of system to large-scale solar producers. Other companies that we have in terms of microinverters and solar batteries are Enphase and SolarEdge. We've also got companies like Schneider Electric and Johnson Controls, large global industrial companies that are really well exposed to the energy efficiency trend and can really help their customers reduce energy use. We've also got a number of large utility companies, both in the US and Europe. And these companies, they have a range of different power generating assets, but these are some of the largest builders of new renewable capacity in the world. And with that, I will say thank you very much for taking the time to listen to my presentation today. I hope I've been able to give you a good picture of where we stand right now with regards to the climate crisis, the current energy crisis, and the role that renewable energy can play in alleviating both of these crises. I hope you've gotten to know a little bit about Fondsfinans and our investments in renewable energy and gotten a little bit of a better idea about the different technologies that are available for investing. Please contact us if you have any questions, and I hope you have a great day.